Hey digital investors, welcome back to another video where we cover everything that is going on inside of the crypto markets. This one is going to be something I've actually never done before. I was getting ready to just do a normal video, but last night I uploaded one to the Patreon, and I think I should share it here as well. I don't think I should keep it just the Patreon just for a video like this and what the mainstream media is doing. I just feel as though I should make it public, so that's what I'm going to do. This isn't the full Patreon video. This is a certain segment of it. If you want to watch the full video, I'll leave a link to the Patreon in the description. If you guys want to check that out, it'll be the first link in the description. But with that said, guys, I don't want to waste your time. I'm just going to play it, watch it all the way through. I also add a clip in at the end, which you may have seen. It's a pretty popular clip, but if you're new to crypto, you know, maybe you've been in crypto a year or less, you may not have seen this clip, and it's something that you should definitely watch. So watch this all the way through. I think you'll really like it. All right, thanks guys. Make sure you like the video, and I'll see you on the next one. Let's get to the point of this video, why I felt the need to record it, because it's been a pretty boring week, right? We don't really have much to talk about, right? We have all the gaming coins, we got into all those gaming coins, all the Polkadot ecosystem projects, and we're riding those pumps now. So here is really why I felt very compelled to make this video, because we are seeing the same narrative with the same lies, trying to make the same outcome of taking money out of your pocket. In fact, probably, you know, for most people, for most of retail, actually losing money here. So here's an article straight out of CNBC. Bitcoin enters bear market territory as risk assets plunge on new. See, and I have this video uploaded to YouTube, so it's in the Patreon, but it's uploaded on YouTube, so I can't say this. I mean, I think even an unlisted video is probably going to bring up red flags. So on this new beer disease variant, because we can't speak freely here on YouTube. So this new beer disease variant is causing this plunge, and Bitcoin's entering a bear market. And I just ask you, when we look at Bitcoin, and especially, you know, mainly from here to here, where we are now, does it look like we are in bear market territory, guys? I mean, does it really look, as CNBC says, Bitcoin enters bear market territory? I mean, this right here is bear market territory. In what way? In what way is this bear market territory when we broke out to new highs and now we are back testing these old highs? And also, I mean, it doesn't take an expert technical analyst to see this. We're making a series of higher highs and higher lows. In fact, if this makes a higher low here, which it looks like it is doing, it looks like it is actually going to form a higher low, we're probably going to see the price action continue to the upside, because this is the trend that's being established, right? We had that sell-off, and now our trend is bullish. We are in a bullish trend. And CNBC is putting out this article. This was posted yesterday, and they're putting it out, you know, getting you to sell, right? Getting the dumb money, getting the retail to sell while smart money steps in, because smart money sees we broke new all-time highs. We're back testing the previous all-time highs, right? Support resistance flip. That's what smart money is seeing right now. Meanwhile, CNBC is convincing the retail to sell their coins and to capitulate to the smart money, okay? And this is why we don't listen to mainstream news sources ever at all, ever, because they're not on our team. They are very much against the small retail trader. So Bitcoin enters bear market territory. Again, where, CNBC? Where is this bear market territory? Because to me, what would be bear market territory to me? There is definitely a way we could see bear market territory. And for me, that would be us crashing further, breaking through our previous all-time highs, breaking through this trend, right? If we were to come through and sell off through the trend, and then we have a rally, our reaction rally, we come up and we reject, that is confirmation that this trend is no longer valid, okay? At that point, we can start questioning, oh no, maybe the bear market, maybe we are in bear market territory, right? Only at that point. But as of right now, guys, I promise you, no analyst that is being honest with themselves is thinking this is bear market territory, because it's not. And this is probably one of the most poorly just poor, just sloppy, and just a clear example of how the mainstream media will try to shake you out of your bags. So let's get into this here. I'm gonna take a quick sip of water. So we have Bitcoin fell sharply alongside other assets on Friday, hitting a 7-week low and officially entering bear market territory. Again, officially to who? To who does this look like official bear market territory? I mean, it seems as though either I am blind or CNBC here just has a magic crystal ball and they can just see the future, because there's nothing here that indicates bear market territory. But we have CNBC preaching to the masses that we're in bear market territory. So to say hitting a 7-week low and officially entering bear market territory. The world's biggest crypto sank nearly 8% in the last 24 hours to 54,000. 8% for Bitcoin, guys. For Bitcoin. And an 8% decline in Bitcoin is nothing. I mean, that shouldn't even scare you at all if you've been in Bitcoin for more than a year, right? 8% decline. I'm not even getting out of bed to look at the chart for that. So they say the slide brought Bitcoin to its lowest level since early October. Bitcoin is down more than 20% from an all-time high of nearly 69,000, which it hit earlier this month. And bear markets are typically defined by a decline of 20% or more from recent highs. So here we have CNBC truly showing off just how out of touch they are, where they're using traditional metrics to gauge the crypto market, right? A 20% decline or more from recent highs. But those of us in crypto know a 20% decline in crypto is nothing and is in no way indicative of a bear market or a potential bear market. In fact, a 20% decline is quite common and something that if you've been in crypto for a while, you're not even really going to be affected by. They say other cryptos also plunged Friday. We have Ether that fell by more than 10%, and XRP that fell 9.9%. Very accurate there, 9.9%. Good job, CNBC. Digital currencies are falling in tandem with other risk assets amid panic over a new, heavily mutated variant of the beard disease, first detected in South Africa. And haven't we heard all of this before? When the first beard disease came around and the whole world was just gonna fall apart and we were gonna have a stock market crash and we're going back to the Great Depression. And what happened, right? What happened the last time this happened? The last time we had fear-mongering headlines like this because of this. When was the last time that happened? And it was March of 2020. You guys remember March of 2020, where the world was just losing their minds. And what happened? We sold off, and we sold off good. I mean, if you had cash on the side here to buy up this blood, my God, you look like a genius. But anyways, the articles coming out here during this beard disease time were very much so like this, right? Very much so like this. Very fear-mongering. Very the world is going to end. And what happened? What came after was the greatest Bitcoin, maybe not the greatest, definitely not the greatest, right? Of course, the previous runs were much greater, but you guys get what I'm saying. One of the greatest Bitcoin runs in history, right after they're talking about, when this originally first came out. And the headlines were just like this, where we're in a bear market. The price targets for Bitcoin at this point, when this was happening, guys, I remember the price targets for Bitcoin was, probably $1,000. People saying we're going down to $1,000. We're going to new lows. And that was very much so what a lot of people thought. They thought we were going to knock out the previous year's lows and go down here, right around here to about, $1,000 or so. That was a serious target, $1,000, $2,000 that people would talk about. But no, instead, what the mainstream media was able to accomplish was it was able to get retail to capitulate. Able to get retail to capitulate because of this event, for whatever reason, because for whatever reason this event scares people. So by using this event, they were able to get retail to completely and utterly capitulate all the bags that they, for the most part, accumulated in here, right? All of this selling is very likely coins that were accumulated here. It wasn't coins that were accumulated here because smart money was buying here, okay? And then dumb money bought this pump. They bought all the sideways, not accumulation, but distribution, right? They're buying all the distribution, just like up here. Everybody who was buying up here was all dumb money, buying the distribution, thinking they're buying sideways accumulation. In hindsight, it's always clear to tell this was distribution. Just as here, all distribution here. And who was selling here? The dumb money. And who stepped in? Look at these massive wicks, the massive amount of buy volume that got stepped in by the smart money, and then they sent it, right? And then the narrative starts to get really good, and the mainstream media starts to get really bullish around this point, right? Right as we're cracking our old all-time highs. I have the line drawn too, $19,000. The mainstream media starts putting out that bullish narrative, and suddenly Bitcoin's exploding. JP Morgan's predicting $150,000 Bitcoin. Elon Musk is buying Bitcoin. Everyone's buying Bitcoin. We're all going to make it. We're all going to get rich together. You know, just all the nonsense, right? And they're doing the same thing now, okay? The same narrative, the same lies, all in the goal of achieving the same outcome of getting you to sell your bags, to smart money, to these guys, right? Who's entering? Who's going to be the smart money entering? It's going to be the guys in charge of these media companies, the big money, the smart money, who loads up, right? So I felt the need to make this video because I guess the message today is don't be fooled. Don't let them fool you. Know what has happened before, just like with the China stuff, right? Oh, China's going to ban Bitcoin. Yeah, China's been banning Bitcoin for 5 years. It is the same games, and unfortunately, they just can't wake up from it, right? Or I don't know if it's, obviously a lot of people just never learn from their mistakes, and they continue to make the same mistakes. And some people do learn, right? Because I was one of those people where I was making the same mistakes forever. I was buying pumps and selling dips for I would say a long time, at least a few months. And at least I learned. I'm very grateful that I learned, and I switched my behavior. But I was there too, right? We were all there at one point where you're just getting into a market, whether it's the crypto market, the stock market, whatever it is, you're getting into a market and you're getting washed in, washed out. You don't know what you're doing, right? Thankfully, we have learned from our mistakes, but we have a large amount of people who just never learn from their mistakes. And that's why it's so easy to manipulate them like this. You have people who take mainstream news serious, and that's why it's so easy to manipulate them. And of course, now, since we're getting new market participants, especially new market participants into crypto, who are just ignorant of the nature of crypto. They're ignorant of how crypto operates. And again, if they're reading CNBC, then they think that this year, a decline of 20% or more from recent highs is typically defined as a bear market. If they're reading that, they just believe them and they just take that. But we know, a 20% decline in crypto is not indicative of a bear market in the slightest. I would say, it's going to take at least a 60% dip until I say, okay, you know what? We can probably confidently say the bear market may be in, but even 50% dips, we get that. We get that on the way up. Let's see what this dip right here was. The first major Bitcoin dip was 54%, and we recovered. We recovered into new highs. So don't let them lie to you. Don't let them shake you out. Know the truth, know the past, right? Know this market and understand the games that the powers play to shake you out and get you to capitulate into the smart money. That's all I have to say. I really hope you guys are doing well. Really appreciate all your guys' support. I'll probably have a YouTube video up tomorrow just going over, just the basic news of what's going on. But for you guys, definitely wanted to put out this video. So thank you guys for watching. I hope you learned something. So thank you guys for watching, and I will see you on the next one. Have a great day, everybody.
So it's, again, and this is one of the things you're kind of going to get into with the conspiracy that is going on, if you can call it that.
I call it that, Glenn. It is. What do you call it when people are deliberately pushing down the price of an asset publicly and then going out privately and buying it?
Yeah.
That's manipulation.
Yes, it is.
It's a huge transfer of wealth that's happening right now. The last time I saw something like this was back during 1994 to 1995. In the early to mid-90s, individuals were making just enormous amounts of money buying companies like Dell, AOL, Microsoft, Netscape, and some of these smaller internet stocks. And the institutions had completely missed that bull market. And so they were scoffing at these so-called lemmings. And so during 1994 to 1995, we had a bit of a bear market. And so, again, institutions were out saying that, oh, anybody buying internet stocks, you're idiotic. And so you had a lot of people selling their AOL, selling their Microsoft, selling their Dell shares. Guess who was buying? It was the institutions. If you look at a chart of institutional allocation to venture capital internet deals, it doubled between 1994 to 1995, which was exactly when institutions were saying, oh, this is just a market for idiots. Nobody should be buying this stuff. So they literally stole all this wealth that should have been in the hands of individuals that owned Dell, Microsoft, and AOL. And then from 1995 to 2000, of course, we saw $5 trillion come into the market, and the biggest bull market we've ever seen. So this blueprint of creating fear in order to get cheap prices is nothing new. So
hang on just a second before you go on.
Yeah.
This one is really important to me because the housing crisis, those banks, they bought up all of those houses. They were the ones who caused the problem.
Right.
Then they were talking everything down and saying, I'm just taking the junk off the table.
Yeah.
That's not junk now.
It's not junk. When it's dropped 40 to 60%, it's not junk. So this happened between 2011, 2012. Blackstone Group buys 50,000 homes. But during this period of time, the regular individual couldn't get a mortgage, right? It was virtually impossible to get a mortgage during this time, exactly when institutions were buying. And then the dot-com crash in 2003. If you can go back and look at old CNBC clips during 2003, even as the market was starting to come up, oh, don't buy tech stocks. No, they're evil. Don't buy tech stocks. Don't buy tech stocks. But institutions, if you looked at the 10Ks, the Qs, and all of the filings, the quarterly filings, they were all loading up on tech.
This is how the rich get richer.
Yes.
They know, they're connected. A lot of times they're coordinating without the insider trading. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like this.
So now, with crypto, I know personally, people that would have gotten in or stayed in if these people weren't saying what they're saying.
Right, and so this has really been extremely egregious. So on September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says you fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Right.
Okay, George Soros,
in January 24th, price was already down, calls Bitcoin a bubble, says Bitcoin is the worst investment in the world. Don't buy Bitcoin. Don't buy Bitcoin. Basically throws gasoline on the fire at this point. And then what do we find out? So he says bubble here.
It drops 44%.
Right. And then here in April, 2 months later, guess what we find out? His $26 billion family office has approval to buy crypto. Okay, so then here now, Goldman Sachs, this, again, February 7th, most cryptocurrencies will crash to zero. Now, I remember when they said this in February, and I had, through my network, I knew that Goldman Sachs was setting up a crypto trading desk. Absolutely knew they were setting up a crypto trading desk.
And I remember you telling me that.
Right. And then, of course, they were denying it. No, we're not. No, we're not. No, we're not. Price falls down 27%. And then what do we find out? We find out here, they say BTC 0. And then we find out just before May, new trading desk. Not only that, they put $400 million to buy a cryptocurrency trading platform. Okay, so February 7th, it's all going to zero. May, we just spent $400 million just on a flyer.
And they're not the only ones.
No. So you have a lot of institutions that are coming. You had Christine Lagarde from the IMF come out And this was, what's funny about this, Glenn, is it was all around the same time. It was almost like I can't prove collusion, but, you know, it walks like a duck, it quacks like a duck.
And you know what?
It's probably a duck.
The people, they all hang out together. They all think alike. It doesn't have to be calling each other.
Yeah.
They know this game.
Yes. So IMF, Christine Lagarde says in the first part of the year, says all central banks should band together against cryptocurrency.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
Right.
And so people thought, this is over.
Selling. Yeah.
So let me show you, can we show a chart of the 5 crashes? This is from, I think,
last year, right?
Last year, okay? Do we have that chart of the 5 crashes of Bitcoin?
Right. Was 30%. Right. I think 4 of them were 30%, and 1 was 40%.
And this is, here it is. This is 1 year.
That's just last year. Yes. That's
Explain this.
So I had recommended Bitcoin back here, and in 2017 we just saw this massive volatility. And you got to remember, if you don't see that, you see this big move down, and you're freaking out. So every time this happens, most people...
a 40% crash is scary.
That's what happened in July. So this is one of the reasons why I say that Bitcoin is not a bubble, because if you look since 2011, we've had 4 major moves from lows to high, from lows to high. And even if you bought at the high of each move, you have still made money.
Right.
And that can't happen in a bubble.
No.
That can't happen in a fraudulent asset class. Rather than listening to what people are saying, look at what they are doing.
Correct. So
this is what we should look at, and this is what I want people to focus on now. Billionaire hedge fund manager Stephen Cohen, who's worth between $12 to $14 billion, by far the smartest hedge fund manager in the world, I would say of the last century, is buying Bitcoin. $6,800, buying Bitcoin. Mark Lazary, Avenue Capital Group, worth about $1.7 billion, has put 1% of his net worth into Bitcoin at around this price, $7,500. Andreessen Horowitz,
Mark Andreessen.
That's right, Mark Andreessen, an early investor in Airbnb, Skype, Facebook, just launched and Coinbase just launched a $300 million fund. Wellington Capital, they have $1 trillion in assets, are starting to get involved in Bitcoin futures. Susquehanna, the 12th largest trading firm by volume, they now have their own Bitcoin custody department, their own trading department, and they're trading Bitcoin and Ethereum. Goldman Sachs, this new CEO, David Solomon, the most pro-Bitcoin / cryptocurrency guy on Wall Street. The most pro
Goldman Sachs.
Goldman Sachs. He's the new CEO. He's coming into power shortly. BlackRock, this announcement just came out, the world's biggest asset manager. Now, last year, Larry Fink says, oh, you know what cryptocurrency and Bitcoin's good for? Money laundering and drug dealers. Right? So again, if you look at what he's saying, you're going to sell your Bitcoin, right? You're going to say, oh, this is all BS. But guess what is happening now? They're going to launch an ETF. They're looking at an exchange-traded fund that will allow anybody with a brokerage firm to make it as easy as hitting a buy button to go out and buy Bitcoin. So you've got to look at this preponderance of evidence, right? All these people are already wealthy. All these people care about their reputation. If Bitcoin is such a trashy asset, why are all these people getting involved?